features you won't find anywhere else, like dynamic graphing. This will help you quickly identify future values and help clients visualize how the product will benefit them. Because the tool is web-based, all illustrated values are current and accurate as of the moment you log in, not the last time you updated the software. Here's a look at the final illustration report. For the first time, sales strategies will be integrated within the tool. We've started with individual estate transfer, our most often used strategy, and we'll add more over time. We've heard your feedback, and now we're delivering illustration features you've been looking for in a tool. This is just the beginning. We've started with term sales, participating sales, and participating in-force illustrations for policies issued on or after January 1st, 2017. We're building the tool in stages, adding more features as we go to help you and your clients. Over time, we'll add more insurance products and additional sales strategies. Experience the new illustration tool for yourself and see how it can benefit your business.
Welcome to Canada Life's second annual Insurance Live event. I'm Paul Orlander, Executive Vice President, Individual Customer at Canada Life, and I'm pleased to open our event today. I'm speaking to you today from London, Ontario, which is the traditional territories of the Anishinaabe, Haudenosaunee, Luna-Pewauk, and Attawandaron nations. The peoples of these respective nations have long-standing relationships to the lands of southwestern Ontario and to the City of London. Today, there are 11 First Nations communities in southwestern Ontario, along with a growing Indigenous urban population. Canada Life acknowledges the harms of the past, and we respect the history, people, and land in the areas we live and operate. We are committed to building relationships and moving forward in the spirit of truth and reconciliation, guided by shared principles of respect, equality, and collaboration. I want to thank you for choosing to join us today. It's always our goal to leave you with fresh insight that you can use to grow your business, as well as to keep you up to date on the latest market and investment outlook. The next 2 hours are going to be jam-packed. We hope you find this to be an engaging and informative event. A few housekeeping items before we get started today. First, on your screen, you'll see the Slido pod. Using Slido, you can ask questions directly to Ryan and Raman during their segment, and you can vote up your favorite questions. A reminder that before you leave today's program, please be sure to hit the red button on your screen to qualify for CE credits and to complete a short survey on today's program. Please take a moment to complete it, as your feedback helps drive the direction of our future events and programs. If you have any technical questions during the show, there's a help button on the bottom left corner of your screen that you can press for assistance. So first up, I'll be speaking with business leaders about how we're accelerating and optimizing our insurance solutions at Canada Life. Then, we'll hear from Ryan Marcy, Vice President, Large Case Services, who'll provide an update on our participating account investment strategy. We're pleased that Raman Srivastava, Global Chief Investment Officer, joins us again this year and will answer questions from Ryan about current market conditions and how they affect the participating account. Ryan and Raman will then host a live Q&A. We'll follow the Q&A with some musical entertainment by Canada's own Alan Doyle, best known as lead singer for Newfoundland's beloved Great Big Sea for 20-plus years. Following Alan's performance, we'll pause for a 5-minute break, and then we'll be back for our last expert panel, live from the Canada Life Cafe. We have a great show ahead. So a lawyer, an accountant, and advisor walk into a bar, how to avoid missteps in estate planning with your clients. It's going to be a dynamic session filled with great advice from the expert panel. And to close out our session today, we'll have a message from Jeff McCowan, President and Chief Operating Officer of Canada Life. Watch for an email after the event to receive your digital copy of our new 2021 Financial Facts. And this event will also be available on demand next week, should you want to revisit it or share portions of it with someone. Let's get our event started. Joining me for our Canada Life Insurance Business Panel are members of my individual customer leadership team. I'm really pleased to welcome Andrea Frossard, Senior Vice President, Participating Insurance Solutions, Katrina Lee Quen, Senior Vice President, Non-Par Insurance Solutions and Individual Customer Digital Strategy, and Cheryl Monroe, Senior Vice President, Operations and Customer Service. This year, we continue to focus on providing innovative insurance solutions, delivering great digital experiences, and streamlining processes to make it easier for our advisors and customers to do business with us. Andrea, let's start with a question for you. We have a long history with participating life insurance, PAR products, with deep experience. In addition to this experience, strong consumer confidence in our brand and rich value-added services, particularly in our large case area, that makes our PAR offerings stand out in the marketplace. Could you highlight some of the factors that make us such experts in PAR?
Thanks, Paul. We are committed to our PAR offering and the active management of the PAR account. Our status as the largest open PAR account in Canada shows that we're a top player year after year in PAR sales. We have the trust of generations of Canadians. You just don't get to this size without being great. As one of the fastest growing brands in Canada, customers recognize Canada Life as a trusted brand in the marketplace. The strength of our brand helps build confidence and trust with customers. One way we further enhance the value of our offering is through our large case services team. Ryan Marcy, who leads the team, is a CFA and works closely with the investment team with a particular focus on the PAR account investment strategy. His team is made up of accountants focused on financial underwriting, actuaries who can answer questions related to our products, and Lifeline, a team that provides help with special illustrations. The large case services team adds value in a number of ways through investment, actuarial, accounting, and illustration expertise. They're instrumental in helping you to place business.
Thanks, Andrea. Cheryl, you're regularly evaluating our service model, working to streamline processes to make it easier to do business with us and to meet the changing needs of advisors. You and your team place a really heavy focus on fully understanding the needs of customers and working behind the scenes, bringing the right team together to solve complex issues and finding the right solution for the customer. Can you tell us a little bit more about how your team provides specialized supports?
I sure can, Paul. Our customer service team supports both client and advisor inquiries about new business, plus ongoing administration post-issue, things like policy change and claims. We do get a lot of amazing feedback on the support provided by our teams, and let me just touch on a few areas. Our new business associate model, or NBA as you'll hear it referenced, is a single point of contact for all advisors or branches and a role dedicated to service problem solving. Our underwriters, who are also accessible for risk-based discussions and issues, and as Andrea talked about, we have an incredible team of support for larger, more complex cases. Our advanced underwriting team is made up of a team of exceptional individuals who have worked in the jumbo case market for years. They understand these cases require collaboration, including increased communication with all team members, including advisors, our medical directors or physicians, our experts in the field, financial underwriting and accounting team, our reinsurers, pricing, and product support. But what really sets Canada Life apart as an industry leader in the high net worth and ultra high net worth space is that not only do our field partners have access to top-notch field underwriting experts, but there's also direct access to the experts who have a hand in the actual case through the process, and the team will assist in navigating both pre and post underwriting.
Thanks, Cheryl. I think it's great how we've been able to partner with advisors, our employees, and our customers to take an innovative and personalized approach to make doing business with us easier for advisors and their clients. Katrina, you've been at the heart of our digital lab since the beginning, and it's terrific to see this great new digital ecosystem coming to life. Can you speak to us about some of the latest developments coming out of the labs and how the teams are engaging with advisors to deliver a great digital experience to best meet their needs?
Sure, Paul. In the last few years, we launched one of the best digital applications in the industry, Simple Protect. Working in an agile way, the Simple Protect team delivers new capabilities iteratively based on the greatest need or value. A key part of our new way of working is to receive constant and ongoing feedback from our users so that we can better understand what's important to them. For example, with COVID changing the way advisors do business, we created a PDF version of our contracts that could be used for electronic signatures so that advisors didn't have to wait for a paper version and collect the signatures. We're currently working on further electronic contract enhancements to make placing business with Canada Life easier. And this past fall, we also expanded eligibility for Simple Protect applications for all adult ages and up to $20 million for life and $3 million for CI. We've also stood up another digital team with a focus on making it easier for advisors to do business with Canada Life, called Advisor Workspace. We'll be making it available to all advisors later this year, and it includes functionality such as a 360-degree view of their customers' holdings for all insurance and investment products, seamless integration into other tools, and access to forms and marketing material. This digital team also takes an agile approach to implementing new capabilities and works closely with advisors to listen and learn what they need and want out of the platform. Lots more to come from Advisor Workspace, and thank you to all the advisors listening who are providing us with some great insights.
I know advisor input's been central to the process, and I'm sure several of our viewers here today have provided feedback, so thank you to everyone who has. Andrea, our Future of Illustrations initiatives, that's an excellent example of how we're bringing innovation, efficiency, and great digital experiences to advisors. What can you tell us about Canada Life's new illustration platform?
Anyone who joined early will have seen the promotional video of our new illustration tool, which will be coming soon. It was also built with feedback from Advisor and is an easy-to-use web-based tool advisors can use to create meaningful illustration reports for their customers. As Katrina mentioned, Advisor Workspace is the gateway to doing business with Canada Life, including access to the new illustration tool. First up on the new tool are new term sales, new participating sales, and participating in-force illustrations for policies issued on or after January 1st of 2017. We'll continue to add new product illustrations, sales strategies, and features. To ensure a smooth transition for all advisors, our current Concourse illustration software will still be available. The new tool is faster and dynamic for different devices. We've added some brand new features you won't find anywhere else, such as dynamic graphing, and we're in the process of integrating sales strategies. It's all very exciting, and I really can't wait for it to be launched, Paul.
Thanks, Andrea. I can't wait either. It's going to be a huge win for advisors. Cheryl, back to you with another question. You spoke earlier about the claims teams. Can you highlight how they play such a pivotal role in the customer experience, how important it is for advisors to have this support behind their clients?
Oh, sure can. These are the folks that bring advisors' hard work to life and ensure that we're there for our customers when they need us most. I regularly get feedback sent to me directly from customers or their loved ones about the care and compassion and speed that my teams provide. We also do conduct ongoing surveys of our claims beneficiaries just to ensure we're providing that care and compassion support during their time of grief. And we consistently hear that our staff are thoughtful, patient, and caring, again, when people need it most. And I really do think this is a great reflection on the advisor as well for choosing Canada Life to partner with to help look after your customers. And I really am very proud of both my disability and my life claims teams.
And understandably so, Cheryl. Our purpose is putting customers at the center of everything we do, and I know that you and your teams are living that daily. Katrina and Andrea, I'd like to shift back to product for a few minutes. We've delivered greater flexibility to our customers through innovation in products and its delivery. Can you highlight a few examples? Katrina, why don't we start with you?
Sure. So earlier this year, we repriced Canada Life My Term and introduced a term reset feature. This new term conversion with reset feature makes partial conversions to a new permanent policy more desirable, flexible, and affordable. Another quick highlight, in December of last year, we simplified our underwriting requirements by expanding the limits on accelerated underwriting for all of our life insurance products. An accelerated underwriting program eliminates age and amount evidence as a requirement. Now, some customers may still be asked to provide additional evidence since we continue to request evidence for various reasons, such as randomly, targeted based on our predictive models, and on a discretionary basis. However, it also enables more customers to have a streamlined underwriting process and get the coverage that they need faster.
Katrina. Andrea, what stands out for you on the PAR side?
There is always lots going on to help keep our PAR products top of mind. In 2021, we made enhancements to our additional deposit option, ADO as we call it. These enhancements were focused on increasing flexibility for customers and for improving processes for customers and advisors. For example, we introduced unlimited stop and start privileges, giving customers flexibility in when they want to make their deposits. We also simplified processes by introducing some ADO without underwriting for attained age term conversions. I'm also excited about what you mentioned earlier, Paul, that we are launching our new 2021 Financial Facts today. It's a great piece that speaks to our investment experience in 2021 and also provides information about how the PAR account is managed. Watch for your digital copy in your email after Insurance Live. Also in May, we will be launching a brand new 2021 Year in Review report. It does a deeper dive into the investment experience of each asset class of the PAR account. We're dedicated to transparency in the management of our PAR account, and this new piece increases that transparency even further. The last thing I want to mention is that we will be making our dividend scale announcement in May. While I can't go into any detail yet, as always, we actively manage the PAR account and make responsible and realistic decisions that will serve customers well over the long term. Be sure to watch for that announcement in May.
Thank you, Andrea, Katrina, and Cheryl. It's clear flexibility has been a major focus this year, and it's this type of innovation and choice that sets us apart in the marketplace and enables advisors' businesses to grow. I want to thank each of you for contributing to our panel. It's been an exciting year with a number of things underway to deliver innovative products and great experiences for advisors and their customers, and we hope you all agree. It's my pleasure to introduce next Ryan Marcy, Vice President, Large Case Service Insurance Solutions. Ryan, over to you now for an update on our participating account investment strategy.
Great. Well, thank you. Great to be here again. Very excited to come back this year to provide an update on the latest evolution of our PAR account investment strategy that we announced last year at this event, which will really continue to fortify our position as the largest and leading PAR account in Canada. So a quick recap, as we detailed last year, our PAR investment strategy has evolved over the years to make sure that we can continue providing stable long-term returns through various market environments, both good and bad. The latest evolution, which as I mentioned was approved by the board early last year, included the transitioning of our overall asset mix to 70% of our invested assets in fixed income investments and 30% in non-fixed income investments, or NFI. In total, a shift of more than $2 billion in our asset mix. And once again, just the latest update in the active management of this participating account. As part of this latest update, we committed to growing our overall exposure to non-fixed income, but also importantly, continuing to diversify within non-fixed income, including increasing our private equity exposure to 4%, growing our commercial real estate allocation to 12% through both acquisition and development, and transitioning our public equity exposure to include more U.S. content. These changes continue to build on our account's exposure to alternative assets or private asset classes that are generally difficult for retail investors to invest in. And as we spoke about last year, once we've fully implemented these updates, we expect to have industry-leading exposure to those alternative assets relative to any of our competitor PAR accounts. In 2021, we continued to take advantage of our access to expanded and enhanced asset management capabilities, working to continue to capitalize on our ties to the Power Corp umbrella. In 2021 specifically, we transitioned the management of our public equity assets to Mackenzie Investments following the sale of our internal asset manager, but also importantly, started to invest through Putnam Investments as well, an industry-leading public equity asset management firm based in the US with over $200 billion in assets and a very strong track record of investment performance, including having 80% of their assets in the Lipper top quartile on a 10-year basis as of the end of the year. So I'm very excited to be here today to provide an update on execution over the past year, some truly exceptional progress made to date. As shown, the PAR account's non-fixed income weight has grown from 21.9% at the end of 2020 to 30.1% by the end of the year, successfully achieving our interim asset mix target on time with our goal for approximately the end of the third quarter that we laid out last year. And as we continue to execute on our investments in the less liquid private equity and real estate asset classes, we remain on target to ultimately reach our underlying non-fixed income mix within the next 12 to 24 months. As part of this shift, we are continuing to strategically invest in more foreign assets throughout all asset classes within the PAR account. Importantly, fully hedged to continue to reduce any foreign exchange risk. This foreign exposure diversifies the PAR account to a much wider range of high quality companies, different industries, and local markets that we can invest in. And at the same time, potentially driving the potential for higher expected returns. So I wanted to spend a bit more time providing some visibility into the growth that we actually saw last year in 2021 within each of those non-fixed income asset classes. So I'll start in private equity. The PAR account has been very busy in private equity, investing through key partners in both Canada and the US, including leveraging our ownership stake in Northleaf, accessing investment opportunities at Sagard through our ties to the Power Corp, and our recently acquired ownership stake in Sagard itself. And finally, continuing to invest through some of the largest and most well-renowned US private equity firms south of the border. This slide is an example of an actual private equity fund that the PAR account committed to invest in last year. And this would be just one single example out of numerous private funds that the PAR account would have exposure to now for our policy owners. This example is a Northleaf private infrastructure fund, which was launched by Northleaf in 2021. And as you can see on the slide, the fund is focused on sourcing, owning, managing, and improving the returns on a variety of well-positioned infrastructure assets located across stable jurisdictions around the world. Moving to real estate, our teams did an exceptional job of sourcing new assets for the PAR account in 2021, adding more than $500 million of physical direct real estate to the PAR account. You'll see that in Canada, we added 2 industrial properties in British Columbia, a high-quality grocery center in Ottawa, and a large land package in Richmond Hill, penciled for future industrial development for the PAR account. In the US, we've been even more active, adding more than $300 million in industrial properties last year, including a new New York City land parcel penciled for future development as well. So I wanted to spend just a few moments providing a couple actual examples of some of these recent real estate assets that were acquired by the PAR account last year. This first example is a 178 unit multifamily residential property, very exciting property in Charlotte, North Carolina, called The Mint. This particular building has a great location in uptown Charlotte, directly adjacent to Truist Field. The building itself is highly amenitized, a strong walk score, and certainly upside potential to capture higher market rents as the tenants turn over. So a very exciting asset for the PAR account. Another great example of a real estate asset acquired by the PAR account last year is this industrial portfolio in Massachusetts that was acquired by the PAR account for just under $100 million in May last year. This is a Class A property, a great location just outside of Boston, strong tenants in place already, very well connected to deliver on last mile distribution needs in that region, so capitalizing on the continued growth in e-commerce. And then finally, in public equities, our CIO, Brian Allison, and I, we worked closely with Mackenzie Investments and then subsequently Putnam Investments throughout the year to conduct due diligence on how we can better position the PAR account to capitalize on the much broader public equity capabilities that Mackenzie and Putnam offer. So we've reallocated a good portion of our public equity investments at Mackenzie and Putnam to both broaden our style exposure, so value, growth, dividend, large cap, mid cap, and also our geographic mix, so continuing to expand beyond just Canada to include the US. So certainly exciting changes that we announced back a year ago, hard to believe a year ago in April of 2021. I hope it's very clear to see that the investment teams have been very hard at work executing and are certainly on track to deliver on our promises. In addition to the execution in our non-fixed income growth, it was certainly nice to see the markets cooperate last year, with US and Canadian public equity markets having very strong years and leading the way for public equity markets globally. So overall, I'm pleased to announce that our participating account one-year investment return in 2021, including our surplus assets, was 7.3%, approximately double our account return in 2020, despite continued pressure from low interest rates. So shifting gears a bit, I am very excited to have Raman Srivastava join us today. Raman is EVP, Global Chief Investment Officer at Great-West Life. Welcome, Raman.
Thanks, Ryan. Happy to be here.
Okay, so for the audience tuning in, as Paul mentioned, there will be an opportunity to ask Raman and I questions about the information that we'll cover today. So please enter your Slido questions on the right side of your screen. Please also include your name so that we can follow up if we do not get to all the questions on the board today. So Raman, first question for you. I'm sure you've heard this one a lot. We are obviously seeing reported inflation at multi-decade high levels in both Canada and the US. Central banks have dramatically changed their commentary over the past several months, and markets are now baking in up to 10 interest rate hikes this year in 2022. South of the border, similar story in Canada. What is your take on the outlook for inflation and interest rates?
Yeah, you're right. This is a topic that comes up quite often, and I just got to reflect. It's been extraordinary what's been going on in the interest rate and inflation markets over the past, call it 12 to 18 months. Like if you remember back right around this time last year, the rhetoric was completely different. You know, there was effectively no rate hikes priced into the market for 2022. You know, early in 2021, the rhetoric from the central banks was about average inflation targeting. So in other words, allowing for a temporary overshoot in inflation, or quote unquote letting inflation run hot, because, you know, to the extent there was higher inflation, it was due to, you know, transitory or temporary factors. So supply chain disruptions, you know, temporary higher demand coming out of lockdowns, et cetera. So that was a rhetoric. And the danger with this, of course, is if there is a miscalculation in this and you sort of let that inflation genie emerge from the lamp, it's hard to squish it back in. And you know, fast forward to today, and I think many central banks have recognized that there has been a miscalculation. Obviously, we have seen a lot more inflation. It hasn't been transitory. And now central banks find themselves behind the curve, you know, trying to crush that genie back into the lamp. So as you said, you know, there's 9 or 10 hikes priced into the U.S. market for the balance of this year. Not as much in Canada, but similar. You know, 8, 9 hikes priced into the market for the balance of this year. So to me, the real question is, where do we go from here? And I think to try and answer that question of where do we go from here, it's important to maybe just decompose what's been driving inflation over the recent past. And if you think about inflation in two components, one being goods inflation and the other being services inflation, what's been driving the big numbers higher has been goods inflation from goods. So, you know, food, gas, housing, used cars, automobiles. You know, it's remarkable. I went to buy a new car last November, and they told me it was going to be a 5 or 6 month wait before the car was being able to be delivered. So I said, okay, well, maybe then I should consider buying a used car, you know, a 18-month-old or 2-year-old used car. And the price of the used car was actually the same, or in some cases higher than the price of the new car. So you have, you know, very strange things going on in the goods market. It shows up in the data. So that's what's been going on. It's been, you know, service inflation has been high too, but really what's been driving this higher has been goods inflation. Now, if you look out over the course of this year, what's likely to happen is goods inflation will begin to subside. You know, there will be some alleviation in supply chain bottlenecks. Some of this post-lockdown pent-up demand will begin to ease, and you should see goods inflation begin to ease. So, you know, you can imagine a scenario where the central bank, you know, both in the US, Canada, globally, continue their hiking paths. Inflation begins to come down. and everyone declares victory and says, job well done. We've contained inflation. If you don't get this pickup in services or wage inflation, that could be the scenario. And in fact, that I think is what's kind of priced into the market. But to me, what gives me pause is if you think about the medium term and you think about what's priced into the market, which is basically, if you look at the forward markets, what the market is telling us that if you look out 1 year, 3 years, 5 years, and you think about a 10-year interest rate, basically what the market is saying is that 10-year interest rate, whether it's in the US or Canada, is going to be right around 3% for the foreseeable future. That's basically what the market's saying. And I think part of the reason for that is inflation has been relatively low for the past couple of decades. But if you look out at some structural factors which are shifting, I think there's a risk to that 3%. So demographics, you have baby boomers who have been saving for retirement, are now transitioning into retirement and will begin to spend down those savings, primarily on healthcare. That's inflationary. China, which has been an exporter of deflation and low wages, that they've begun to catch up in terms of wage differences. That's more inflationary. And then with COVID, there's a desire to shorten supply chains. Again, that has the impact of being inflationary. So to me, the risk is if you look out over the medium term, the central banks may think they've declared victory on inflation, but really that 3% is too low of a number. And if you remember, interest rates were 6% back in the early 2000s.
So great insight there on inflation itself, and I wanted to tie this back to the PAR account because inflation and rising interest rates obviously have implications for the PAR account, and again, it's a complex topic, I would say, for the PAR account as well. For fixed income in the PAR account, which as a reminder, as I just went through, is still 70% of the asset mix for the PAR account, increasing interest rates would be generally a positive thing for the PAR account. PAR is a very unique product in that for all of our fixed income assets that we don't divest in a given year, which is a majority, we only include the income or the coupon portion of fixed income returns in our DSIR calculation. So on the slide here, you can see the teal portion. That's what we include in the DSIR calculation. We don't include the price change or the gray portion that you see on the slide here. So in a rising rate environment, we may be able to expand that teal portion and earn more interest income, yet we won't be negatively impacted by the price change or the pressure on fixed income market prices from rising interest rates. So certainly interesting to see rates rising. The other thing I would just say for the PAR account, really important, is that Canada Life's participating account is in particularly solid shape to benefit from those rising rates, just given our comparatively shorter fixed income ladder. And our shorter fixed income ladder means that we will have more maturing assets every year than our PAR peers, which means that we will be reinvesting more each year into that rising rate environment. And you can see that dynamic on the right-hand side of this slide here. So very exciting for the Canada Life PAR account, especially relative to other PAR accounts in the industry. To give you a bit of an idea of sensitivity to rising rates, we ran some numbers and we would expect that if interest rates were to continue to increase by 300 basis points over the next 10 years from where they ended 2021 at, so about 1.4% Government of Canada 10 years, we would expect to see upward pressure on our PAR investment return by about 60 to 70 basis points over time. And ultimately, depending on how other factors play out, so non-fixed income returns, credit spreads, the asset mix itself, this could subsequently flow through to our DSIR over time. So very exciting in terms of the potential implications for our PAR account. What's interesting and kind of building on the scenario I just laid out is that we've already seen Government of Canada 10-year rates rise by another 140 basis points since the end of the year when rates were at the 1.4% level. So very exciting for the PAR account. Obviously, the impact of rising rates on non-fixed income assets is a bit more nuanced. And these asset classes, such as real estate, public equity, can certainly do well in a rising interest rate environment, like we witnessed last year. Rates were increasing. Obviously, real estate and public equity markets had very strong years, especially if rates remain low overall, and the increases are really driven by an improving or strong economy, as you mentioned when you were speaking. Obviously, there is some potential for pressure if rates were to rise materially, especially real rates on non-fixed income asset classes. But overall, within the non-fixed income asset class space, we feel as though we are quite well positioned, even in those more dramatic interest rate environments. And then I think if you take a step back and if you look at the PAR account as a whole, when you consider both fixed income and non-fixed income, we really do feel as though we are in a good position to benefit from a further rise in interest rates, especially relative to our competitor PAR accounts. So Raman, one follow-up question. Historically, when we've seen the yield curve invert, we've seen a recession afterwards. Given that portions of the yield curve have recently inverted, what's your take on that? And in your opinion, are we heading towards a recession?
Yeah, it's true. History would suggest that when the yield curve does invert, and usually when people look at this, the market tends to look at the difference between the 2-year rate and the 10-year rate. So that's the one that a lot of people use. And when that curve inverts, it typically has meant there's been a recession. In fact, every recession since the 1970s was preceded by an inversion in the 10s yield curve. So when you listen to a lot of the market rhetoric around this particular inversion that we saw, and the curve steepened up since the curve did invert recently, but a lot of what you hear is, it's different this time. Now, no one actually says this time is different because, as the legendary investor John Templeton remarked in 1933, those are the most expensive words in investing. This time is different. So no one actually says this time is different, but basically they're contemplating, could this time be different? Because a few reasons. Like if you look at what's been holding down yields in the back end of the curve, it's a lot of central bank buying of bonds. So a lot of demand for central banks buying bonds through quantitative easing drives down yields. That's sort of distorting yield curves. Even recently, the Fed chair, Jerome Powell, mentioned that it's probably not the best place to look. If you look at what the Fed prefers, which is a much shorter part of the yield curve, what they look at is, what's the current 3-month rate and what's the market expectation for that rate, say a year and a half from now. That's a very upward sloping curve. So, so it depends what part of the curve you look at. And if you look at a different part of the curve, it's actually very steep. So hence, less chance for a recession. And, if you think about the last time the curve inverted, which was in 2019, yes, we had a recession, but it was from obviously the COVID pandemic. And it's hard to say that the inversion of the 10s curve was the reason we had COVID. So there's a lot of, narrative out there saying, well, this time is different. You're not going to actually have a recession. And I have some sympathy for that, because if you look at the economy, there's a lot of tailwinds to the economy. Household balance sheets are fairly strong. Now, they're stronger in the US than they are in Canada, given the amount of household debt that we have from real estate in Canada, but still household balance sheets are relatively strong. You still have government spending and deficits, and there's a lot of CapEx needs in the economy. So there are some tailwinds here. So I'd say, in terms of what's the probability of the recession over, say, the coming year, I still give it sort of a 1 in 3 type of chance for a recession, given these tailwinds in the economy. However, if you do get these wage pressures, you do get the service inflation that we talked about before, you do have the Fed and other central banks having to hike again, then I think if you have a bit of a longer time frame, say 24 months, the odds of a recession go up materially. And in fact, I'd call it almost a base case. Then over the next 2 to 3 years, we're going to find ourselves in a much slower growth environment. So long story short, I don't think we can ignore the inversion of the yield curve, despite all these differences.
Yeah, that's great insight. It'll be certainly very interesting to see how that plays out. From a PAR perspective, I would say that inverting yield curves, economic uncertainty are certainly not new to our investment teams. We have been investing through many tumultuous times, many uncertain markets, and as you can see on the slide here, we've paid a dividend through all of those difficult market environments, world wars, great financial crisis, and certainly during COVID as well. So I agree with you, lots of uncertainty out there, but our investment teams have certainly proven that they are used to and experienced in investing through these type of environments. Wanted to move to Russia, Ukraine. Obviously very hard to fathom all that's taking place over in the Ukraine right now. Clearly the ongoing conflict has the potential to derail economic growth, both in Europe, but also closer to home. What are your thoughts on the potential impact of that conflict on economic growth or in markets in general?
Yeah, I guess I would agree. I mean, it's hard to fathom. It's a tragedy, and first and foremost, our thoughts remain with everyone impacted by these actions in Ukraine. We hope there's an end to this war, as soon as possible. In terms of the economic and macro impacts, I think it does depend on region. So you're right that the European region is more exposed to a direct economic impact from the war, given the reliance on energy from Russia and via Ukraine. The one that maybe gets less airtime is emerging markets, because I think, as we've seen and we saw in the data recently, food inflation beginning to spike. Sadly, that has and hurts some of the most vulnerable people in the globe, particularly those in parts of the emerging markets. So there's more of an impact in Europe, parts of the emerging markets. I think in North America, it is more muted. We don't have really as much of a direct impact on our economic growth from the activities and conflict that's happening in the Ukraine. However, I think it's important to reflect for a couple minutes on the potential geopolitical consequences and what that might actually mean in terms of risk going forward. So obviously, it feels like we're entering into a new Cold War between the U.S. or maybe the West and Russia. The Russian economy is not as large as what it was back in the 80s. So it's less kind of a direct macro risk now than it was back then. However, I think a key question is what will other countries do, and could this morph into something a bit larger than just a Russia-U.S. or Russia-West conflict if this war is prolonged? And in particular, I think the one to watch there is China. And if this war, which is now confined to a small region, expands into a Cold War, which is characterized, as Joe Biden has mentioned, as a war between democracy and autocracy, well, that's something much different and has the potential for creating a lot more impacts in terms of inflationary impacts, as we talked about before, shortening of supply chains, growth impacts. The IMF came out recently and downgraded its growth forecast for the global economy based on this conflict. So in other words, you have a lot more stagflationary risks in the market, less so now due to the particular conflict, but the potential to grow. And if you think about what we were talking about just a few minutes ago, and the challenge that central banks have in navigating what is a really difficult line to draw between not hiking rates too much, but then not being too slow either, this risk of stagflation is already a big one in the market, and has the potential to become even a bigger problem if this war is prolonged.
Yeah, certainly a tragedy. Hopefully we do see positive resolution soon. I would say from a PAR perspective, I just wanted to provide a little bit of insight into kind of how the PAR account would be exposed to Russia and the Ukraine. The PAR account remains very focused. We have not changed our focus on owning quality assets, I would say, located in really strong and stable jurisdictions. So you can see on the slide here that our PAR account would have only about 1% of our assets outside of Canada or the US. If you look inside that 1%, those non-Canada, non-US assets, they're entirely focused on established G7 countries. So overall, we can affirm or confirm that the PAR account would have no direct exposure to Russia and Ukraine. But as you mentioned, it will certainly be very interesting to see how that plays out and what the peripheral impacts are. So Raman, switching gears completely here, the number one question that I have received over the past year is related to ESG. Specifically, how does Canada Life incorporate environmental, social, and governance considerations into the assets that are owned by the Canada Life PAR account? Very important. I know that Great-West Life made some exciting announcements on this topic last year, and there's more to come in 2022. So maybe could you spend a few minutes speaking about the ESG announcements that we made corporately last year, what you're expecting for 2022, and then perhaps some broader industry trends that you're seeing?
Sure. I think maybe just starting with the last one there, the industry trends are at the same time both encouraging but also daunting. I call it relentless in terms of the focus on this area in a good way. We saw it first emanating out of Europe, but it's very quickly made its way to North America from regulators, clients, a number of our stakeholders. So we've been engaged in these discussions across all jurisdictions for some time now. And I would say, Europe has really led the way with respect to the overall framework, but we're seeing that thankfully being emulated in a lot of other jurisdictions, which makes it a bit easier when we think about reporting, which I'll talk to in a second. At a high level, what I always like to remind people is for the investment process that we run, ESG isn't new. We've been incorporating ES and G factors into our investment process for decades. They always joke, we don't invest in poorly governed, non-sustainable companies. It's not what we do. So it's always been a tenet of how we invest. The difference, I think, now is that what we want to try to work towards is sharing more specifically exactly how we do this and where possible, quantifying it. And I think the real challenge that us in the industry has is how to quantify it, and the data in this space is not yet where it needs to be. I think it's improving, but you have inconsistencies in the data, a lot of holes in the data. So this is going to be a bit of a journey, but we are working towards trying to be a lot more explicit and quantify exactly how we're incorporating ES and G. So with that, we have made a number of announcements. There's a number of organizations that we participate in. I won't have time to list them all, but some of the bigger ones, I'd say, the CDP, which was formerly the Carbon Disclosure Project. This is one where we've been participating since 2013. We've received in the past some very high scores, some of the best in North America for insurance. We continue to support that. We've recently come out as an official supporter for the something called the TCFD, or the Task Force for Climate-Related Financial Disclosures. As you mentioned, Ryan, last year we did make a couple of public announcements with respect to net zero commitments. So on the operations side, we've committed to a net zero target well before 2000. By 2050. And we recognize that those are longer term and they might seem, way out in the future. This year, what we do want to try and do is focus on interim targets. So giving a better idea of, as we look towards, say, 2030 or 2040, what is the shorter term path by which we can make good in our longer term commitments. And, some of the things we're really focusing now on the investment side are different levers that we can pull to get us towards our eventual goals of a net zero carbon footprint. And I think the biggest one is how we engage with the companies that we invest in. We really try and avoid excluding companies, especially in an economy like Canada, which is very reliant on oil and gas. We think, engaging with companies and trying to help them in terms of reducing the carbon footprint is the best way to achieve this outcome. And obviously, we're going to continue to grow our green investments. We're big financiers of a number of green investment projects, whether it be solar farms, wind farms, hydro projects, and that's going to continue to be a big focus for us, not just in Canada, but globally.
Some great insight there, and maybe I'll follow on your last point there. Just tying ESG specifically back to the Canada Life Par account in a little bit more detail. The management of our par-owned assets would be based upon the ESG strategies of each of the underlying asset managers, which would manage each of the asset classes. So I have a few examples here, and you just touched upon infrastructure. I would say, first of all, we have a meaningful ESG framework in place within each of those asset classes for the par account. So within each asset class, they are actively considering ESG considerations. You can see on the slide some examples. In public bonds. We utilize a third-party provider to integrate ESG considerations into our bond analysis process that we conduct for each of our bond holdings. In public equities, our primary asset managers, Mackenzie Investments and Putnam Investments, which I already spoke about, are both signatories to the Principles for Responsible Investing, or UNPRI. In the private placement or private debt and commercial mortgage space, every asset that's underwritten is evaluated inclusive of any relevant ESG factors. And to your point that you just made a moment ago, if you look within the private placement or private debt sector specifically, our PAR account has very strong exposure overall to the renewable energy industry, with power generation being about 40% of our asset mix, and the vast majority of that being hydro, wind, and solar power generation. So very well positioned there. And then in real estate, our wholly owned subsidiary, GWL Realty Advisors, is truly an industry leader in the ESG space, having been awarded the 5-star rating for the 5th consecutive year last year. So very focused within each of those asset classes for the PAR account. So Raman, last question for me before we go to Q&A. I think we have a lot of great questions from the audience. So last question from me. Great-West Life recently announced the formation of a new and expanded global private debt team or private placement team. Can you just spend a few quick minutes speaking about this new team, the focus of this new team, and what that may mean for the Canada Life PAR account?
Yeah, absolutely. So I think, first off, private debt's a key component of the strategy. It gives you the chance to pick up extra yield without taking extra credit risk. You get it from taking complexity risk or liquidity risk. So it's going to be an important part. It has been and will continue to be an important part of the strategy. Before we talk about the private debt team, I'll just comment on something that's been pretty exciting for our organization over the past couple of years, which is we've been growing in the U.S. on the acquisition side in the retirement space. So we acquired MassMutual's retirement business, and we also just recently closed on Prudential Retirement's business in the U.S. And with it, what's happened is our U.S. general account invested assets have grown substantially. And the reason I mention that is it's quite a big change for us. With a bigger general account balance sheet and also a bigger U.S. base, we are able to anchor much bigger transactions than we used to in the past. So in order to capitalize on that opportunity, we've reorganized what have been really strong teams in Canada, Europe, and the US into a global private debt team to really be able to capitalize on these deals. So we've done it for years and years in Canada, for example, where we participate in a lot of infrastructure transactions. But if you think about the opportunities that are going to arise over the coming years, think about the U.S. where they just passed almost a $2 trillion infrastructure bill, the America Rescue Plan. That's going to be opportunities in Europe, as we were talking about earlier, as energy needs are reoriented more towards local. That's going to require an infrastructure build. So we think there's going to be a number of jurisdictions where we can take what we've been doing in the past and really expand it. So it's exciting for us on the private debt side.
Opportunities for sure on the private debt side. I would flag that even before this, Canada Life's PAR account already really does have industry-leading exposure to private fixed income as a whole. So certainly very exciting to see what this new global private debt team announcement will mean to further building out the private placement asset class specifically, and continuing to really drive us as leaders in the private fixed income space. So very exciting opportunity there, Raman. So I wanted to get to the questions. I think we do have a lot of questions that have come in so far from the audience, which is great. And as a reminder, if we don't get to them today, as long as we have your name, we can certainly follow up on this. Really appreciate the engaging conversation, Raman. So before we get to those, Raman, any final comments that you'd just like to make before we get to those questions?
Yeah, well, Ryan, I would just reiterate what you were saying before in terms of the resiliency and history of the managing this product. I mean, we've gone through pandemics, we've gone through wars, we've gone through a number of different climates with respect to economic ups and downs. So I would reinforce that. I think the point that you were making on the latter is going to be a key one. If we're in a new generation of structurally higher inflation, I don't think we could ignore the rate regime that we were in before. And I think the PAR strategy is well positioned to be flexible and responsive to potential rises in interest rates, even from here. And there's just a lot of exciting stuff going on in the investment team. So happy to be able to share some of that with you. Great.
So just a reminder on Slido. We should have just under 10 minutes for Q&A here. please feel free to add any questions or vote on the questions that are in there. Maybe for the first question, Raman, others have criticized that the size of the Canada Life's power account makes us potentially a bit of a sleepy giant. Can we speak to the advantages or disadvantages of being so large? I'm happy to take this one, or unless you had any initial thoughts up front.
Yeah, I can provide a couple initial thoughts. I mean, one of them was just the one I was just alluding to. There are some definite benefits that come from scale. So for example, I mentioned the one before about private debt, being able to participate in much larger private debt deals. That's a game changer for us in terms of the way we're going to be able to access that particular market. And same goes with a number of different other industries. So think about the partnerships, Ryan, that you were alluding to before on the whether it's the private equity side or some of the other alternative asset classes. When you have a much larger relationship, either via a minority equity holding or just a large investment with a particular firm, you get a lot more attention. You're able to access bigger deals. It's easier to ramp up. So it's hard in the sense that it's a bigger asset portfolio to shift. But the reality is we're not making massive shifts on a day-to-day basis. We are trying to implement strategies in a prudent way, and I think scale can be a real advantage in accessing, particularly the private markets.
Yeah, maybe I'll just add one point to that. I would say that size, 50 billion, close to 50 billion at the end of the year. If you think about illiquid asset classes, real estate, private debt, commercial mortgages, we can spread that risk out across a lot more individual illiquid assets. You can also layer maturities to create liquidity by having it spread out over so many more assets in those illiquid asset classes. So certainly some advantages to being the largest power account in Canada. So the next question, a major competitor has mentioned that the bond portion of their power account, when the bulk are maturing, will cause underperformance in the next few years. What's your outlook? I'm happy to take this one first, Raman. Certainly, as I spoke about before, we have a shorter fixed income ladder than our peers, so a 10-year ladder. So what that means is essentially we've rolled over all of our fixed income, 10% mature each year. So over the last 10 years, we've rolled over all of that fixed income into what has now been a sub 3% interest rate environment over the past 3 years. So we would have our fixed income assets on the book in that low rate environment. Some of our competitors, which have longer ladders, would still have assets on the books that would be yielding 5-6% from 25 years ago. They will have to now roll those over into this low rate environment, which this question is speaking to. As we talked about earlier about that, in a rising rate environment, how we're well positioned, I would say that and it's in our financial facts document this year. If you look at market interest rates in January and February of this year, market interest rates were actually 4 basis points above the maturing fixed income in our portfolio or in our power account. So we're very well positioned given that we've rolled over into that low rate environment over the past 10 years. I don't know if you have anything else to add, Raman? Or?
No, I think you covered it well, Ryan.
Okay. So moving to the next question, given the power account dividend scale is below inflation, what's the strategy going forward, or is the strategy to stay the same? Any initial thoughts on that one, or?
Yeah, I can give a couple thoughts on this one. So I think there's a few things. If you are, which we are, concerned about a structurally higher rate of inflation. I mean, one gets to what you're just saying, Ryan, in terms of the ladder strategy, and naturally, what's going to happen if inflation winds up being higher on a structural basis, rates will be higher, and we'll be reinvesting our maturing bonds at higher interest rates. Whereas, if we had locked in those bonds for 20 years, we would have been stuck with effectively lower rates. So there's a general responsiveness to inflation, just given the ladder strategy. The other thing I'd say is one way to protect against inflation is in hard assets. So, real estate, even parts of the equity market, and we tend to focus on sectors where there's repricing capability. So if you have companies or if you have hard assets that can be responsive to inflationary trends, you're naturally more protected than, again, being stuck in a fixed in a bond which has a long duration and no ability to adjust upwards. So that's, I think, the NFI strategy, the ladder strategy should help us if we do get into a period of sustained high inflation.
And I would echo that second comment. Inflation historically, public equities, real estate have done well a lot of times in inflationary environments. Obviously, it depends on the extent of the inflation and the pace, but historically, those have been two asset classes that have done well and can respond well to inflation. So typically viewed as good inflation hedges. So I agree with you. I think we're pretty well positioned from that perspective. Next question, how would an advisor circumvent the DSIR objections from my clients, as Canada Life is known for its conservative approach to their PAR account? I'm happy to maybe take a shot at this one first. I would say that Canada Life, I don't like the word conservative. I like the way that we position our PAR account in the sense that we're focused on quality. I like the thought that goes into each investment that goes into our PAR account in each asset class, and that quality has certainly served us well through time. So it's not always going to be good markets. It's not going to always be bad markets. It's not going to be high inflation or low inflation. You have to invest in a way where you can perform through full market cycles. So that focus on quality has certainly served us well. And I think that if an advisor is very vocal about what's in our PAR account, what's under the hood, and shows the type of assets that's in there, they can certainly build a lot of confidence that somebody buying this product for decades is going to be very well situated, not just for the current market environment or the next 5 years, say. Any further comments on that?
Yeah, a couple of things. So number one, the DSIR is, it's one metric. And we've been in a period for 20 plus years now where there's just been a lot of liquidity from central banks and everything has looked good. That's shifting. We're going to be in a new environment, and it's not going to be as easy. And I would just say, we're going to turn 175 years old this year. It's older than the country. And so, we take a very different approach to this. We think over the long term, we think we'll be more responsive, if we do happen to get into a new rate regime, as we've been saying. And yeah, we're not always going to have, the best DSIR, but I think, we're going to be well positioned to provide for clients over different cycles. And we think happen to be heading into a cycle of tighter liquidity from here.
Great. Well, unfortunately, we're out of time. Thanks everybody for their questions. As mentioned, we will follow up with answers for the questions that we did not get to. Special thanks, Raman, for joining us today. That was really appreciated, very insightful. Obviously, many important issues in the market today, so we truly do appreciate your time and your insight with us. All right, well, thank you, everybody. I hope you enjoyed the session, and I'd now like to turn it back over to Paul.
Thanks, Ryan. Great job. So tremendous update from Ryan on the active management of the participating account in 2021, and an exciting conversation with Ryan and Raman on the current market conditions and how they're affecting the participating account. Outstanding questions from the audience. We appreciate that, and lots of information to take away as well. So let's change things up with 15 minutes of great Canadian entertainment, followed by a 5-minute break. Then we're back for our last expert panel live from the Canada Life Cafe. So please join me now in welcoming Canada's own Alan Doyle. Enjoy the show.
Good people of Canada Life. Alan Doyle here. I'm delighted, I am, to be part of your celebration here today. It's nice to gather us, even if virtually. Let's get a song going on. Here's one that I always like to welcome people with a song from Newfoundland, and here's one of my favorite Newfoundland traditional songs. Where it's a wave over wave, sea over bow, I'm as happy a man as the sea will allow. There's no other life for a sailor like me, but to sail the salt sea, boys, sail the sea. There's no other life but to sail the salt sea. Well, my name's Abel Rogers, a shareman am I, on a three-masted schooner from Twillingate Isle. I've been the world over, north, south, east, and west, but the middle of nowhere's where I likes it best, where it's wave over wave, sea over bow. I'm as happy a man as the sea will allow. There's no other life for a sailor like me but to sail the salt sea, boys, sail the sea. There's no other life but to sail the salt sea. Well, I leave my wife lonely 10 months of the year, for she built me a home and raised my children dear. She'd never come out to bid farewell to me, or ken why a sailor must sail the salt sea, where it's wave over wave, sea over bow. I'm as happy a man as the sea will allow. There's no other life for a sailor like me but to sail the salt sea, boys, sail the sea. There's no other life but to sail the salt sea. Well, the work it is hard and the hours are long, but my spirit is willing, my back it is strong. And when the work's over, the whiskey will pour, and we'll dance with the girls up on some foreign shore, where it's wave over wave, sea over bow. I'm as happy a man as the sea will allow. There's no other life for a sailor like me but to sail the salt sea, boys, sail the sea. There's no other life but to sail the salt sea. Now I've sailed the world over for decades or more, and oftentimes I wonder what I do it for. Oh, I don't know the answer, it's pleasure and pain, but with life to live over, I'd do it again. Where it's wave over wave, sea over bow. I'm as happy a man as the sea will allow. There's no other life for a sailor like me but to sail the salt sea, boys, you sail the sea, where it's wave over wave, sea over bow. I'm as happy a man as the sea will allow. There's no other life for a sailor like me but to sail the salt sea, boys, sail the sea. There's no other life but to sail the salt sea. Wave over wave, one of my favorite Newfoundland songs. A good welcome to us all, and a hello and a bonjour, and to everybody from across the country and wherever you are in the world checking us out and joining us here today. A grand thanks to the folks at Canada Life for having me as a part of the celebration. I do look forward to the time when we can get together ourselves for reals, and it's just been so lucky to get to travel across the country so many times in so many different places that when the pandemic hit, to be honest with you, I missed it, and I missed getting to go to the big cities of the country, but I missed the smaller towns too, and so I'm looking forward to get back at it. Here's one of the songs that always helped us get across the country with Great Big Sea in the first time in the early 1990s. I am the fountain of affection, I'm the instrument of joy, and to keep the good times rolling, I'm the boy. You know the world could be your oyster if you just put your trust in me. 'Cause we'll keep the good times rolling, Just wait and see, wait and see. Oh, wait and see. There's exultation, there's sweet disintegration, there's a few discolorations when it comes along. Now up is what he chooses, all the kisses and the bruises. Sure, there's nothing he refuses when it comes along. It comes along, and I am lifted. Oh, I'm lifted, Lord, I'm lifted. When I'm up, I can't get down, can't get down, can't get level. When I'm up, I can't get down, get my feet back on the ground. When I'm up, I can't get down, can't get down, can't get level. When I'm up, I can't get down, get my feet back on the ground. Lord, he just needs something to blind him, and something to wind him up. It won't take long to find him when it comes out. Strong, white skies are grinning, street lights are spinning, and the night is just beginning when it comes out. Strong, I am lifted. Oh, I'm lifted, Lord, I'm lifted. When I'm up, I can't get down, can't get down, can't get level. When I'm up, I can't get down, get my feet back on the ground. When I'm up, I can't get down, can't get down, can't get level. When I'm up, I can't get down, get my feet back on the ground. No, I can't get down. So come on strong, and I am lifted. It comes on strong, and I am lifted. Oh, I'm lifted, Lord, I'm lifted. When I'm up, I can't get down, I can't get down, can't get level. When I'm up, I can't get down, get my feet back on the ground. When I'm up, I can't get down, can't get down, can't get level. When I'm up, I can't get down, get my feet back on the ground. I can't get down. I said no, I can't get down, no. And I know, and no, I can't get down. High note there for you to finish When I'm Up, I Can't Get Down. God knows, sang lots of them high notes to finish that song. Coast to coast to coast in Canada, I'll tell you right now. All right, let's have a quick look. Before we send it back to Jeff McCown, I'd like to offer one more song, and in the spirit of bringing us all together, if you ever get a chance to write songs for a living, you often hope there'll be one that everyone will cling to. And I'll tell you one thing: thank God for this song. This is one that seems to still resonate with people on a Friday night or a Saturday morning. So thank God for this one. Thank you all very much for today. Sing along wherever you are. I'd love to hear you. Come on. I've got a smile on my face and I've got four walls around me. Got the sun in the sky and all the water surround me. Oh, you know, yeah, I went down. Sometimes I lose. I've been battered, but I never bruised. It's not so bad. And I say, hey, it's just an ordinary day, and it's all your state of mind. At the end of the day, you just got to say it's alright. Oh, Patience on the corner, what keeps her from dying? Let them say what they want, but she won't stop trying. No, no, she might stumble if they push her around. She might fall, but she'd never lie down. It's not so bad. And I say, hey, it's just an ordinary day, and it's all your state of mind. At the end of the day, you just got to say it's alright. Oh, 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 oh. Now, in this beautiful life, there's always some sorrow. It's a double-edged knife, but there's always tomorrow. Oh, you know, it's up to you now. If you sink or swim, you just keep the faith that your ship will come in. It's not so bad. And I say, hey, it's just an ordinary day, and it's all your state of mind. At the end of the day, you just got to say it. I say, hey, it's just an ordinary day, and it's all your state of mind. At the end of the day, you just got to say it's alright. It's alright, it's alright, it's alright. I've got a smile on my face, and I've got four walls around me. I hope you got four lovely walls around you, wherever you are today in the world. Thanks again to everybody at Canada Life for having me. And much love to you and all your families, wherever you are today. Cheers, and we'll hand it back to Jeff McCown. Have a great day, everybody.
In the bay, oh me, heard me, oh I cry, oh me, oh my, I think I'm gonna die, oh me, oh my, I heard me, oh I say, I wish I'd never taken this excursion around the bay. My wife, she got no better, she turned a sickly green. I fed her cake and candy, fed pork and kerosene, castor oil and sugar of candy, her up pure oil on her face. And I said she'll be a dandy when we reaches Harbour Grace. Oh me, oh my, I heard me oh I cry. Oh me, oh my, I think I'm gonna die. Oh me, oh my, I heard me oh I say, I wish I'd never taken this excursion around the bay. My wife, she got no better, my wife, me darling dear. The screeches from her trolley I could hear in Carbonear. I tried every place in Harbour Grace, tried every store and shop, to get her something for a cure, take her to the hop. Oh me, oh my, I heard me oh I cry. Oh me, oh my, I think I'm gonna die. Oh me, oh my, I heard me oh I say, I wish I'd never taken this excursion around the bay. She died below the Brandies as we were coming back. We buried her in the ocean, wrapped up in a Union Jack. So now I am a single man, and a woman that says she'll have me, I'm off for Harbour Grace. Oh me, oh my, I heard me oh I cry. Oh me, oh my, I think I'm gonna die. Oh me, oh my, I heard me oh I say, I wish I'd never taken this excursion around the bay. Hey!
Hunt the hare and turn it down the rocky road and all the way to Dublin and Waffle-Olly-Ra. 'Twas in the merry month of May, from me home I started, left the girls in Tuam, nearly broken hearted, saluted father dear, kissed me darling mother, drank a pint of beer, me grief and tears to smother, then off to reap the corn, leave where I was born, cut a stout like thorn to banish ghosts and Dublin, bought a pair of brogues, rattling all the bogs and frightening all the dogs, on the rocky road to Dublin, 1, 2, 3, 4, 5, hunt the hare and turn it down the rocky road and all the way to Dublin, Waffle-Olly-Ra. In Mullingar that night
night, I rest the limbs so weary, started by daylight. Next morning bright and airy, took a drop of the pure, keep me heart from sinking, that's the Paddy's cure. When Airy's on for drinking, to see the lassie smile, laughing all the while, at me curious thoughts will set your heart to bubble, and asked if I was hard, wages I required till I was almost hard, of the rocky road to Dublin, 1, 2, 3, 4, 5. Hunt the hare and turn it down the rocky road, and all the way to Dublin, whack Baloney.
In Dublin next arrived, I thought it such a pity to be so soon deprived of view of that fine city. Till then I took a stroll, all among the quality, my bundle it was stole. In a neat locality something crossed me mind, when I looked behind no bundle could I find. On me stick I wasn't inquiring for the road, they said me Connacht Road wasn't much in vogue. On the rocky road to Dublin, 1, 2, 3, 4, 5.
Hunt the hare and turn it down the rocky road, and all the way to Dublin, whack Baloney. From there I got away, me spirits never fail, and landed on the quay just as the ship was sailing. Captain at me roared, said that no room had he when I jumped aboard. A cabin bound for Paddy, down among the pigs I played some funny rigs, danced some hearty jigs, the water round me bubbling. When a Polly hit, I wished myself was dead, but better for instead on the rocky road to Dublin, 1, 2, 3, 4, 5. Hunt the hare and turn it down the rocky road, and all the way to Dublin, whack Baloney.
The boys of Liverpool, when we safely landed, called myself a fool. Could no longer stand it, the blood began to boil. Temper I was losing, poor old Aaron's Isle. They began abusing the Rami sauces I, Shillelagh I'll fly. Some Galway boys were by,
saw I was a hobbling
with a loud hooray,
joined in the affray.
We quickly cleared the way
for the rocky road to Dublin, 1, 2, 3, 4, 5. Hunt the hare and turn her down